Hey everybody, it is Brad and John from Genesis. How you doing, Brad?
Pretty good, John. How you doing?
Doing outstanding. So today we're going to dive right into it. The word Bitcoin, the seven-letter word Bitcoin. As I referred to in the intro, it's a mystery. It was it started back in 2009, so we're tapping up on 13 years ago. And still today, there's numbers that say somewhere between 87 and 90% of Americans are either clueless, not in a bad way, or they are confused as to what this Bitcoin thing is. So today, you and I are going to unravel what Bitcoin is, make it real simple so folks can understand. And there's going to be a lot of terminology I'm sure that you're going to pop in and toss in. I'm going to try to hold you back. We really wanted the audience to really understand what this Bitcoin thing is. So you have any initial thoughts about Bitcoin that you've been watching in the marketplace that's interesting to talk about real quick?
Yeah, for sure. So, like when it comes to the overall Bitcoin ecosystem, is the biggest thing that I've noticed over the years is that there's so many misconceptions, and that a lot of people may like it or not like it based on things that actually don't even hold up in reality. And so it's really interesting how people perceive Bitcoin. And I think just in general, I always believe this, where folks are fearful of things that they don't understand. And so, there's just that little bit of hesitancy to research it. But in general, the way that I came about with it was, over the past couple years, there's just been a ton of money printing, and we've seen this. Probably anybody that's watched the news has seen that all of the stimulus and all of these different relief funds and whatnot are creating just a massive amount of US dollars in the system. And the more that there are US dollars in the system, the more that the value of any given dollar drops. Conversely, with Bitcoin, there will only ever be 21 million. And that's what's fascinating, is when there's only 21 million, there's not going to be any more ever. And so they can't print more than 21 million. So over time, as more people want it, the more people, the value will go up.
So think about that. Let's talk about that so people understand what you're saying. Around the year 2000, at the turn of the millennium, the United States government had what they call a balanced budget.
Yeah.
The words balanced budget haven't been used. I haven't seen them in the news in years. I think that's just part of the historic dictionary in terms of finance these days.
Yeah.
But starting around the year 2000, the government started printing money because of the economy and fear that there's recessions and things popping up. Of course, the 2008 Great Recession hit, and there were things like TARP. There was the Bernanke helicopter thing, and they were printing $700 billion back in 2009 just to keep the banking system alive.
Mm-hmm.
That was a lot of money. I'll never forget it. I was sitting in my house in California back then and thinking, God, $700 billion. Well, fast forward to today, it's gone from 700 billion to 5 trillion to 10 trillion. Today we're at what? Over 29. I think we just hit $30 trillion
Yeah, it's almost 30.
of government debt. And the thing is, Brad, all they do is print. They literally print, put more money in the system, which creates a devaluation in everything else. Go
Mm-hmm.
ahead. I'm sorry.
Yeah, and that's what's so interesting about it, is that historically, the way that people would escape this money printing was to buy gold. And with gold is great. It's been around for 5,000 years as a form of money. But the problem with gold, in my mind, so for me, for everyone that doesn't know me just yet, I run a software company called Sitecast.com, and I've been just absolutely fascinated with the digital transformation of everything on this planet. The one thing that hasn't transformed is money. And with gold, if you want to send $1 billion worth of gold to across the ocean, that would take a team of people. Like, how do you get $1 billion of gold somewhere else? But with Bitcoin, it's literally, you paste in the little address, and 30 minutes later, it's anywhere you want in the world. And so just the fact that it's changing the way that money flows, the way that people think about money, just in general, is it's just a completely transformative technology from that perspective.
So Bitcoin then has a flow about it that doesn't have intermediaries and people to block it.
Yeah.
You said it has 21 million Bitcoin will all that's going to ever be produced in the world. I think they say that'll be finished by the year 2029. So we have
Yeah.
about another 100 years to go.
Yeah.
How much of a Bitcoin has been mined currently? We'll talk about mining in just a second.
Well, I think it's about 18 million, give or take. But the other thing is if people have lost their keys, which is something we can talk about in the future, but there's a lot of Bitcoin that's been lost as well. So if someone dies or there's a fire damage and they've lost their keys to the Bitcoin, so there's really it's hard to know exactly how much is actually available, but just in general that there's a ceiling to it, that there's no person behind the scenes able to create more, that it's programmatically set at a maximum of 21 million. That's what's so fascinating about it, because what happens then is as more people wake up to what's happening in the central banks of the world, more people, in theory, should want to hold Bitcoin to protect their buying power. And as more people want to hold Bitcoin, the more demand. It's a basic supply and demand thing where there's only 21 million in the supply, and there's going to be more and more people and organizations and funds and pensions and all of these things that governments that are going to want to demand to hold Bitcoin. So as there's no more supply and more demand, prices are going to rise. And that's why we've seen just in the past year alone, this is the end of 2021 that we're talking here. In the past year, it's gone from maybe like 17 or 20,000 all the way up to, at its high, was 69,000. And so the fact that more and more people are going to want to hold it, the price is just going to ideally keep going up. And you see that with the Bitcoin cycle of the price just continually rises over time. It has huge volatility because it's truly a free market, but that volatility still continually goes up over time.
So I don't think you or I understand why 21 million Bitcoin was the established number that will ever be produced. But conceptually, if our government, just the United States government, if they're printing $30 trillion, that is I've been in finance for 25 years. I don't understand what 30 trillion, I don't understand what $1 trillion means. But that means that there's 30 trillion $1 bills in the system today, relatively speaking, right?
Yeah.
That is debt that we owe back. With only 21 million Bitcoin, I mean, even though it still has 80 or 100 years to go till it's all produced, isn't it all going to be consumed? I mean, how does this thing work? How is it looked at as a currency if it's finite number? So supply is limited, and if demand goes up, won't demand all of a sudden just swoop in and grab all the Bitcoin? Or what are your thoughts on that?
I think that will happen, and that there's pros and cons to that. So the more that people do the classic HODL, the HODL, it's just kind of a fun meme that arose from a Reddit post a long time ago. But as
which
more
means what? Hold on for dear life.
That's what it's kind of merged into, but it was I'm pretty sure it was a drunk guy that was saying that he was gonna hold forever, and he misspelled it, and it kind of just caught on. But basically the in general, like as more people demand it, the value will rise. And so what's such a big misconception about Bitcoin is people think that they need to have one Bitcoin, but that's not really the case. Bitcoin is divisible by 100 million. And so if you look at like one Bitcoin is around 50 grand or $50,000 right now. It has a total market cap of about $1 trillion, which gives a lot of upside potential. But with one Bitcoin being 50,000, a lot of people think that they need to have one Bitcoin. But in generally speaking, how many people can just go and buy one Bitcoin? And so the thing is when it's divisible by 100 million, the smallest unit is actually called a Satoshi. And a Satoshi is named after the anonymous founder, Satoshi Nakamoto. And that Satoshi is 100 millionth of a Bitcoin. And so if you start measuring it in that, which the short name is a sat. And so if you look at the sats available, there is a ton. And so as the price rises, yes, one Bitcoin is going to be at some point, hopefully $500,000 or even more. But the Satoshi is where it's more, I would say, equivalent to a dollar, or actually more of like a cent. And so when you look at each Satoshi being a penny, then it becomes a little bit more manageable from understanding it, because at that point, if there's 21 million and then you multiply that by 100 million as well, there's a lot of Satoshis to go around. And so that's where it gets a little bit easier to be able to wrap your head around, I'd imagine.
So let's talk about that. So for the average consumer who is listening to us going, wow, these guys are crazy, but Satoshi, all these, it's a whole new vocabulary, right?
Yeah.
So we know how a dollar gets quote unquote printed. Years ago, they used to literally put it out there. Today, everything just shows up digitally in your bank account. Like last year, people were getting money from the government because of COVID. They were giving people that families $2,500. They weren't giving you dollars. They were giving you 2,500 digital units equivalent to a dollar. So they do that electronically. Bitcoin is the same thing. It happens through a mining process, right? Through algorithms. Do you want to explain a little bit about, the mining process on how we create? We have to understand we create gold from natural resources. Earth creates gold. Federal reserves create dollar units or euro units by just hitting buttons and printing digital codes that create more into the system.
For sure.
What about Bitcoin?
Yeah. So, and that's a really important point. So it's called fiat money. Any central bank that can just print unlimitedly, that's a fiat currency. On the flip side, there's gold, which has traditionally been the storehold of wealth for a lot of people for millennia. And the issue with that is mining continually gets more advanced from a gold mining standpoint. So the more gold that they find, that just adds to the supply. And when it comes to like asteroids, there's entire asteroids that have gold in it. And so if they can figure out how to go and grab that asteroid, bring it back, now we just all of a sudden we've made a lot more gold. And so it's really not a finite supply even in that realm. But when you look at programmatically speaking, Bitcoin can only have 21 million. That's what's huge. And so in Bitcoin, there's the concept of mining, but it's not exactly like the mining that we think of with gold. What it ultimately is, and this is another big misconception, is around it's called proof of work. And so the more energy that is used, the more secure the system becomes. So a lot of people that are they want climate change and everything to start becoming more of an issue. They're using Bitcoin as an example of just the excess of human nature. But the thing is mining requires proof of work. So it requires these really, really advanced computers to run these algorithms that are called hashing functions that allow for essentially to validate the entire system. And so every miner that's out there uses energy. And as the system grows, it's going to require more energy. But the thing that a lot of the people don't say that are saying the bad things about Bitcoin mining is that a lot of it's done through renewable energy. And it's not, I would have to imagine that most people that are mining aren't doing it through renewables because they care about the planet. It's more an economical thing where if you invest in solar panels or you put it on top a mining rig on top of a hydroelectric dam, or in El Salvador, they're using a volcano. Like if you use a renewable source, over time, it's a better investment because it uses less money in the long run. Because if you have to continually dig up coal and burn it and just do all of that stuff, over time, solar panels become a better investment. So that's what's really important here, is that one of the biggest misconceptions is that energy usage. But on a simple level, that the amount of energy that's required to secure the network is what makes Bitcoin really the strongest monetary system that's ever been created in human history. And I'll just point out one other thing. The reason for that is because all of the miners in the system, when as more transactions hit the system, which is a blockchain, and I could go down a rabbit hole with that one, but basically as more transactions get put in the system, the overall network has to come to a consensus about those transactions. And so if 51% of the miners say that something is the way that it is, then it is what it is. And the way that it can be attacked is if some sort of entity can take 51% of the power and then use that power to say something that isn't true with the system. So 100 billion Bitcoin went over to here. They can attack the system, but 51% of the network at this point is just a massive amount of energy. And so as the system grows, the amount of energy required to create 51% of the overall network, it's just going to get more and more secure over time. If there was ever a time that it could have been attacked, it would have been in the early years when it would have just required a little bit of energy to have a 51% attack. But now to overcome 51% of all of the miners it's nearly impossible. It's not it would be possible, but it's not financially smart for any organization to try to do that.
So we're talking Bitcoin miners. We're talking machines that they use, right? That
Yep.
sit in warehouses, sit in backyards, that are plugged into either solar or, they used to be a lot in China. Now China got rid of them. Now the United States is where the majority of miners are now, which is a secure thing because
Yes.
there is some quote unquote regulation taking place to help miners to create more Bitcoin and get to this 21 million number. But as Bitcoin, people think that Bitcoin is this currency. Let's talk about currency for a few minutes. You walk into Starbucks today to buy a cup of coffee. 80% of the baristas behind the bar will say, you'll say, hey, can I pay with Bitcoin? They'll say, no, what's Bitcoin? So when people think that it's a currency and you say things like store of value, I understand store of value. Silver has a value to it. Gold has a value to it. You want gold to you don't want gold to be going up. That means the world is going bad because it's more valuable, right?
Uh-huh.
So if gold goes down, that means that other things are going up. It's kind of an insurance policy. But Bitcoin, it's a currency. How do we use it today as a currency so that regular public can understand that concept?
Yeah, and that's the other huge misconception here is it initially was intended to be a currency that you'd go in and pay for it, but pay for a coffee or whatever, but it's so volatile that it's kind of tricky because you could enter the store, think you have $12, by the time you go pay, you have $11, and then when you leave, you might have $13. Like it's not that volatile, but it's pretty volatile in terms of that. But what we have to kind of back up and quickly talk about is, if you think about back in the day, people would use cows to barter with wheat, and they would be able to do exchanges that way. But if you want a pair of shoes and you only have a cow, how are you going to get that pair of shoes? And so that's where representations of your wealth came about with gold coins and just precious metals in that regard. So as these representations of what you had as wealth, it became easier to divide of when you're doing commerce. And so now fast track, now we have the dollar and ways to spend money that way. It's a lot easier way to do commerce when you have an easily divisible, everybody agrees on the value, and it's just very easy to do business that way. The thing that now is starting to happen is that there are new layers being put on top of Bitcoin. Just like the US dollar was built on top of the gold reserve, now there's, like for instance, Lightning Network that allows you to transact with businesses using Bitcoin, and it's built on top of gold, or on top of Bitcoin, just like how the dollar is built on gold. So over time, it could become a currency, but as more and more people start to hold it, it's going to be more seen as a store of wealth, and there'll be other forms of using currency that that are able to settle those payments quicker. And at the end of the day, you look at like the Visas and MasterCards and credit cards out there, there's a lot of systems already able to do the transactions that, you don't need to physically send someone some Bitcoin to do a transaction. There's layers on top of it.
So let's wrap up a little bit here, because this is a big conversation. I'm sure that we can talk about Bitcoin in future videos, but
For sure.
so Bitcoin is a digital currency, and the whole idea of digital currency needs to be explored, because technically today the US dollar is a digital currency. Everything we do online is digital currency. There's no physical dollars.
Yeah.
As a matter of fact, the US government got rid of the $500 bill. It got rid of the $100 bill. They confiscated that, about 3 or 4 years ago? And probably this decade, the $20 bill is going to go away. So ultimately, the government or governments are, through their centralized mechanisms and ability to make decisions themselves, they're getting rid of paper currency and going digital. So this is just another form of currency that will be able to be used like a gold, like any metal would be, but now it's a new form of digital currency. And it's also decentralized. So no one controls Bitcoin, right?
Yeah.
No one can go in and kind of determine what it is. It's talk about decentralized just for a second so people understand that.
Yeah. So the with central banks, it all comes from it's literally in their name, central bank, where they are going to have CBDCs, which are central bank digital currencies. So the next time they need to send out stimulus, you're going to have a wallet. They're just going to put money, a digit, numbers in your wallet that they're then going to be able to tell you, okay, you can spend it this way in this radius of your home, or you have to spend it on rent, or whatever they want to declare that to be, which is great. That's a huge innovation for the US and for other central banks. But on the flip side, with Bitcoin, it's completely decentralized, but there's no central person that controls it, where all of the miners that we were talking about, and they're all over the world, all of the miners can run whatever software they want to mine it. And if they all choose to use the same software, that then tells, that this is what they want to have happen. And we saw this recently with, there's an upgrade called Taproot, and there's a bunch of other, upgrades over time. But the miners, each one gets to decide what version of the software they run. And just in general, then that's where consensus happens throughout the entire system. So when you have different countries or people in different countries, all of these different organizations running these things, that it then really helps prevent a malicious actor from doing anything bad with the system. So just that decentralized aspect of having all of these miners make these decisions, that just makes the whole process so much more secure than, some faceless organization like the Federal Reserve in the US, or the IMF, and, all of these other, the digital yuan, all of those. There's who's behind that? We don't know, but there are people behind that. With Bitcoin, it's just a group of miners that can run their software, and if enough of them do it, then those changes happen. So it's pretty exciting.
So Bitcoin has a lot of things wrapped around it. Decentralization, miners, supply, demand.
Mm-hmm.
I mean, there's so many things that we can unwrap. And folks, we are going to be talking about a lot of these concepts in future videos. One thing we didn't talk about today was, and that'll be a deep dive that we go into, is the blockchain. We'll save that for the next time. But so, Brad, I think we're going to cut it off this time. I appreciate your time this week.
Sounds
Folks,
good.
come back next time. We'll be talking about smart contracts. We'd love to see you then. Until next time.
Yep. You have a great day, and we'll talk to you again soon.